The nation's top financial leaders expected to once again raise interest rates when they meet again this week. And this is part of their ongoing effort to fight inflation. National political correspondent Stephanie Liebergen reports.
On Tuesday and Wednesday this week, the Fed Board of Governors will sit down in this building behind me for their monthly meeting, and they are expected to raise interest rates again. And while that makes borrowing money more expensive, it could mean good news for your savings. The Federal Reserve has two main goals: maximize employment and minimize inflation. And the only tool it can use to achieve those goals is changing interest rates.
When you raise interest rates, you slam on the brakes of the economy because you make it more expensive to borrow money for any reason.
In June, the Fed decided not to raise rates, citing the positive trend in job growth and unemployment. But the board is expected to raise rates this time around. At the beginning of the pandemic, the Fed dropped interest rates to near zero. In March 2022, it raised rates for the first time in almost 2 years. Fast forward to today, interest rates are just over 5%, and that increase impacts car loans, credit cards, mortgages, and more.
And while a couple of percentage points doesn't sound like a whole lot, but it can mean thousands of dollars over the life of a loan, particularly when you're talking about something like a mortgage.
The Fed's rate hikes do seem to be helping the economy. Inflation has slowed in recent months, but prices on gas, groceries, and other necessities are still high.
If the Fed's policy is having the impact they hope, it slows this price growth, but it doesn't necessarily turn it negative. So that means you might not see prices come down on some items when you go to the grocery store.
The goal is to slow inflation long enough so increases in wages can catch up. But there is a positive side to higher interest rates, and that's in your savings.
So at the same time that interest rate increases make it more expensive to borrow things, interest rates also create really great incentives for us all to do what Ben Franklin and our moms and dads told us to do, which is save today, because a penny saved is a penny plus interest that you've got in the future to buy other things.
This meeting will be the Fed's last one before their summer break. The official announcement of this month's decision will come Wednesday at 2 o'clock Eastern. Stephanie Liebergen, Scripps News, Washington.